Most day traders are staring at a tangled mess. They layer on dozens of technical indicators and scroll back through months of historical data, hoping to find a clear signal hidden in the noise. But this data overload actually creates a blind spot. By trying to process too much information, traders end up buying into artificial traps right at the exact moment the market secretly shifts direction. Adding more history and more complex indicators to a chart doesn't give you accuracy. It only creates static that masks what the large institutional players are doing right now. The solution is to strip away the noise. This diagram shows a completely clean price chart. When you erase the ancient history and the distracting indicators, you reveal the immediate present. You don't need to know what happened 3 years ago to predict the market's next move. You only need to read the immediate psychology of the buyers and sellers who are active today. True trading mastery comes from identifying the fresh, structural footprints left by recent price action, rather than digging through the archives of a chart. This diagram shows a single trading candlestick. It is the fundamental microscopic unit of price action. As it forms, the price fluctuates throughout the day, before finally freezing and leaving behind thin vertical lines called wicks. The absolute highest point marks the exact moment sellers forcefully overwhelmed buyers, pushing the market down. Conversely, the lowest point on the bottom wick shows exactly where buyers seized control to drive the price back up. By simply marking yesterday's absolute high and low points, you isolate the most psychologically relevant support and resistance zones for today. When you zoom out from a single candle to a sequence of days, you apply this exact same logic to find the strongest zones on the entire chart. This diagram illustrates smart money footprints. Look at this explosive upward movement. That kind of aggressive price action is created by massive institutional capital. When volume moves that fast, it leaves behind a distinct void known as a fair value gap. Next, watch how this explosive move shatters previous resistance levels. We call this a break of structure, mathematically confirming the momentum has completely shifted. An aggressive price move that leaves behind a fair value gap and creates a break of structure validates that specific area as a highly probable institutional footprint. Here is a diagram showing a classic trap called a change of character. You see a sudden drop below a recent low, which causes retail traders to panic and sell. But institutions trigger these artificial dips intentionally, sweeping up stop-loss liquidity before rocketing the price back upward. To defend yourself, check the left side of the chart. Often, you'll find a previously unfilled fair value gap sitting right at the exact bottom of that temporary dip. Understanding these liquidity sweeps separates the retail traders who fall for false reversals from the professionals who ride true institutional momentum. To turn these psychological zones and market structures into an executable system, you apply top-down analysis. This diagram shows the process in 3 tiers. Step 1 happens in the tops, the specific zones responsible for massive institutional moves. Step 2 moves to the middle tier. You zoom into the 4-hour chart to verify that the medium-term momentum aligns perfectly with that larger daily trend. Finally, step 3 is the bottom tier. You zoom into the micro 15-minute chart. Here, you watch the hyper-detailed price action physically hit your major daily block, and you wait for a microscopic shift in supply and demand before you actually enter the trade. This multi-timeframe approach ensures you only execute a trade when macro institutional trends and micro-buyer psychology are in total alignment. There is a profound difference between the anxiety of guessing through decades of cluttered data and the pure clarity of reading immediate structured price action. Successful trading is not the act of fortune-telling. It is a discipline of extreme patience, waiting for precise structural evidence before making your move.